Since 2023, artificial intelligence has added trillions of dollars in market value. A handful of companies now carry the weight of the entire stock market. And right now, the fiercest argument in finance is a single question. Is this the future, or is it a bubble about to burst? Some of the smartest investors in the world say we are watching a revolution. Others say we are watching 1999 all over again. Both are looking at the exact same numbers. Both are certain. They cannot both be right. So let's actually look at the evidence on both sides, fairly. First, what does bubble even mean? A bubble is when the price of something climbs far above its real underlying value. Prices rise not because of profit, but because people expect prices to keep rising. Everyone buys because everyone else is buying. And then, one day the belief cracks. The price doesn't drift down gently, it collapses. We've seen this before, more than once. Tulip bulbs in the 1600s, houses in 2008, and most famously, the internet in the year 2000. That last one matters most here, so let's start with the case for the bubble. The bear argument begins with a simple echo: the dot-com era. In the late 1990s, the internet was new, exciting, and obviously important. Money poured into any company with .com in its name, valuations detached completely from actual profits. Companies with no revenue were worth billions. Then, in 2000, the market lost around $5 trillion. Many of those famous companies vanished entirely. The bears say the pattern looks familiar. They point to today's valuations, which are historically extreme. Some AI companies are priced for profits they do not yet make. The stock reflects a future that hasn't arrived. Next, they point to spending. The amount of money being poured into AI data centers is staggering. Hundreds of billions of dollars on chips, buildings, and power. Entire regions are being reshaped to feed these machines. The bears ask a blunt question: where is the return on all of this? The spending is real and enormous. The profits so far are much smaller. Then there are the deals. The bears point to money moving in circles. One AI company invests in another. That company uses the money to buy chips from the first. That purchase counts as revenue for the first. Critics say this can make growth look bigger than it really is. Money flowing between friends can resemble a real economy from the outside. And finally, concentration. A huge share of the entire market's value now sits in just a few giant companies. If those few stumble, everyone feels it. The bears say we've built a tower balanced on a very narrow base. That is the case for the bubble. It is serious, and it is made by serious people. But now, listen to the other side. The bulls say this time is genuinely different. Their strongest point is simple: revenue. In 1999, many internet companies had traffic but no real income. Today, the leading AI companies are earning billions in actual growing revenue. People and businesses are paying real money for these tools right now. That is not a promise. That is a receipt. The bulls point to adoption. Hundreds of millions of people use AI tools every single day. Companies are using them to write, code, design, and analyze. The bulls argue the productivity gains are real and already showing up. This is a technology in use, not just in theory. Then there's the money behind it. In the dot-com era, much of the spending came from borrowed cash and hype. Today, the biggest spenders are among the most profitable companies in history. They are funding these data centers out of enormous existing profits. The bulls argue that changes everything. A cash-rich giant can survive a slowdown that would kill a startup. And then the bulls play their final card: history. People have called AI a bubble for years now. They called it a bubble at every new high, and every time, so far the market climbed higher. The bulls say, have already been wrong repeatedly. Betting against this trend has been a losing bet. So who is right? Here's the uncomfortable part. Both sides are using real facts. The valuations really are extreme. The revenue really is real. The spending really is enormous. The adoption really is massive. None of these facts are fake. They simply point in opposite directions. And this is why smart, honest people genuinely disagree. A bubble is only obvious after it pops. Before that moment, it looks exactly like a boom. The excitement of a real revolution and the mania of a bubble feel identical from the inside. Which brings us back to the year 2000. Here is the detail most people forget. The dot-com bubble burst. Trillions of dollars evaporated. And yet the internet was completely real. It went on to reshape the entire world. Both things were true at the same time. The technology was a genuine revolution, and the market around it was a genuine bubble. The revolution being real did not stop the bubble from bursting. So let's be honest about what that means for today. It is entirely possible that AI is the most important technology of our lifetime. And it is also possible that the current market has run ahead of reality. Those two ideas are not enemies. History says they can be true together. A real revolution can carry a real bubble inside it. So, are we in an AI bubble? The honest answer is that nobody actually knows. Not the bulls, not the bears, not the experts on television. The timing of these things is impossible to predict. Anyone who tells you the exact date is guessing. What we can say is that the question itself is real. The arguments on both sides are strong, and the outcome is genuinely undecided. The best thing you can do is understand both cases. Not so you can predict the future, but so that whatever happens, you actually understand what you're watching, because the revolution can be real. The bubble can be real, and sometimes they are the same story.